Hello everyone, it's Mark Munzenberger, Financial Education Manager here at the Credit Union. So you've decided to move forward with the purchase of a vehicle, but you don't have the cash to pay it in full. What's the next step? It's to go through the financing process. So before I talk you through the step-by-steps in terms of what happens with that application process, let's first remember that in terms of total overall expenses, we want to make sure that transportation is kept within 15 to 20% of our overall net income each month. That'll make sure we've got plenty of money for all of our other expenses. So let me walk you through the application process so you have a good idea of what to expect when you're going through this. As soon as you submit that application, one of the first things that happens is a credit check. Credit is an essential component in providing you with a good interest rate. So the higher that credit score, the more favorable the terms will be. If you're able to make a down payment on this vehicle, it could be advantageous because it will lower the amount of money that you overall need to borrow, which means your monthly payment will be less. So very important concept that we need to cover here is the difference between the monthly payment in which you're repaying this loan versus the total overall cost of this loan. Let me explain the difference. The longer the term, individuals that opt for longer terms, 5 years, 6 years to repay the loan, will experience a lower monthly payment, but overall will spend more money overall for that vehicle due to the interest charges. Individuals that finance a vehicle for 2 or 3 or even 4 years will have a higher monthly payment, but in totality will spend less on that vehicle because they will spend less in interest charges. I think now is a good time for an example to really show you how this works. We've got two deals here. This individual is going to be borrowing $15,000 and paying 5%. Deal number one results in a monthly payment of $242 a month. Deal number two is resulting in a monthly payment of $450 a month. Now, most people, when they see an example like this, will immediately say, well, of course I will take deal number one. It's way less. However, let's look at these deals in a little bit more detail. So now when we look at the details here, we understand that deal number one is being derived based on a term of 72 months or 6 years. That is going to result in a total overall cost to this consumer of almost $17,400, which is again an interest of about $2,400. Deal number two, while the monthly payment is significantly higher, is a term of only 36 months. That is resulting in a total overall cost to this consumer of a little over $16,000, meaning that we've got about $1,100 of interest being paid here. So if we look here, the shorter term will save this consumer almost $1,300 over the terms of this deal. EMUCU partners with a number of local dealerships to provide on-the-spot financing at very affordable rates. Or another option you may want to consider is to reach out to us in advance for a pre-approval so you know exactly what you're approved for and what that monthly payment would be. So I hope this information was helpful. I very much appreciate you listening, and please reach out to us at the Credit Union if we can be of any assistance to you with regards to your auto financing needs. Thanks everyone.